Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to give you my top 5 stocks during the month of August. Now keep in mind that some of these stocks can be used to trade, to invest, or just to put them on the watch list. The decision to either invest, trade, or to put it on the watch list is going to be up to you. And I try to put some of the stocks that are on different sectors. Now let's start with the video. Now the number 5 stock is gonna be Ambarella, and Ambarella main business is to create chips for action cameras. One of its main customers is GoPro, since they develop a lot of the chips that are utilized in the GoPro cameras. And also the company is involved in surveillance cameras and security cameras. And also Ambarella is gonna be involved with the automotive side in the dash cams and the electronic mirrors, which I think it presents a better opportunity over the long term. And there are news that GoPro plans to move into a different supplier for the action cameras during the second half of 2017. Now it's gonna loosen the short term since that revenue from GoPro is not gonna be there. Now over the long term, one of the things that this company is gonna be involved is gonna be the industrial robotics. Now that market is supposed to grow around 80 billion by 2022. And the company involvement with the auto side is supposed to grow to 80 millions by 2021. And keep in mind that this company already has customers in that sector such as Nissan, Toyota, and Mercedes. Now let's take a look at the statistics for this company, and as you can see in the screen, it has the beta of 1.12, and the company is going to be reporting earnings the last week in August, and I think they are going to do probably decent since they're probably gonna lose GoPro as a customer. And in the forward PE, as you see in the screen, is around 21, which is actually really good in my opinion. And as you can see in the income statement, they have grown, their revenue growth has been going up around 12% year over year, and the quarterly earnings growth is around 43%. And in the balance sheet, you see the amount that it has, 420 millions, and the company doesn't have any debt, which is actually really good in my opinion. And in the short ratio, it has around 12%, which I think is a little bit high for this company. Now as you saw, the company has good fundamentals, and as you see in the screen, the company is negative for the year. Ambarella is negative for 2017 with around negative 7%. And the company should perform better by the end of the year. I think by the end of the year, the company might be on the positive side. Now let's go to the next company, and the number 4 company. That company is gonna be Hasbro, and what that company produces, they produce a lot of toys. And the company barely announced the earnings, and actually the company dropped. The earnings weren't that bad in my opinion, but the company dropped around 10%. And that provided a good discount for the price of each share on this company. But what I'm mostly excited is the future. The company announced that it's going to basically produce and create a subscription model for customers. And the subscription service is going to be priced at $49.99, and it's going to appeal to adults and families. And that is where I think the huge opportunity is going to present for this company. In addition, there are going to be 2 movies that are going to be released by the end of the year. One of them is Thor, and the other one is going to be Star Wars, and those type of movies are going to bring more revenue into the company. Keep in mind that the company creates toys for those type of movies. Now let's take a look at the statistics, and as you see in the screen, the company beta is going to be 0.75, which means the company is not as volatile as most technology companies. And the next earnings is going to be in October 23rd of 2017, and in the forward PE is going to be around $20, which is actually decent. And in the income statement, we see that the quarterly revenue growth year over year is around 10%, and the quarterly earning growth is around 30%, which is actually decent in my opinion. And in the balance sheet, we see that the company has 1.43 billion in cash, and it has a debt of 1.74 billion. So the company has more debt than cash, which is not good in my opinion. But lately the company has performed better in reducing the debt. And in the short ratio, the company has around 4%, which is actually really good in my opinion. And lastly, we're gonna see how the company has performed in 2017, and the company has gone up around 35%, which is actually excellent. Remember, this company is a hybrid between growth and value. Now we're going to go to the next company. And the number 3 company is Paycom Software. Now, while this company might seem boring because it provides payroll services to business, the company has done really well in 2017. And as you have seen lately, we have a high employment rate in the United States. So one of the companies that has benefited the most has been Paycom. And in my opinion, the employment rates are going to continue to improve during the next few months. And now we're going to take a look at the statistics for the company. The beta is around 1.83 and the company is going to announce the earnings on August 1st. And keep in mind that this company has not missed any earnings, so I think it's going to have a good earnings report. And now we're going to take a look at the forward PE, which is around $51. And in this screen you're going to see the income statement. You will see the quarterly revenue growth is around 32% and the quarterly earning growth is around 37%. Both of those numbers are actually really good. And in the balance sheet, we see that the company has more cash than debt, which is really good news for investors. Now, one of the negatives that you might consider is the short ratio. The short ratio is around 32%, which in my opinion is a little bit high. And lastly, we're gonna see how the company has performed in 2017. And in 2017, the company has gone up almost 55%. At this moment, it has gone up 54.89%. And I think that number is going to increase in the next few months. Now we're going to go to the next company. And now the number 2 company is Mercado Libre. Now this company is similar to Amazon and Alibaba. Mercado Libre business is having the visitors go to their site and purchase items from that site. It is basically the Amazon and Alibaba of Latin America. Now I'm going to put on the screen, this company is the number 1 site visited by the major countries in Latin America. Now you see in the screen, this is the number 1 e-commerce website visited by Latin America. It's number 1 in Argentina, Brazil, Mexico, Chile, Colombia, and Venezuela. So when you are the number 1 e-commerce website in Latin America, you're gonna bring a lot of attention. Now I'm gonna compare this company to Amazon, Alibaba, so you can get an idea how the company compares to those 2 companies and other companies such as eBay and JD.com. So as you can see in the price to earnings, this company has around 73 price to earnings, Amazon has around 195, and Alibaba has around 65. So the price to earnings comes really close to Alibaba. Now let's take a look at the EBITDA. Now on the EBITDA growth, this company is around 50%. Amazon has 32% and Alibaba has 56%. And in the EBITDA margin is the number 3 company out of the group. Only Alibaba and eBay have better margins than this company. However, the company is number 1 in returns on assets. And now we're gonna take a look at the statistics. The beta is around 228, which is a little bit volatile, and they're gonna report earnings on August 3rd. And as you see in the screen, the forward PE is around $46. And now we're gonna take a look at the income statement. The quarterly revenue growth is 73%, and the quarterly earning growth is around 60%. So as you see, the company is growing at a fast pace, which is actually good news if you're looking for a high growth company. And as you see in the balance sheet, the company has around 566 millions in cash, and the debt is around 320 millions. So it has more cash than debt, which is actually good. Now let's take a look at the short ratio, and the short ratio is around 4.71%, which is actually really good for this type of company. I would have expected around 10 to 15% for this type of company. So it is actually really low, especially when the company has grown up so much. And for the performance in 2017, the company has grown around 85% for the year. And I wish I would have found this company earlier, because this is a really good business in my opinion. And now we're gonna go to the next company. And the number 1 company is gonna be into the financials, and that's gonna be JP Morgan and Chase. And in my opinion, JP Morgan is the best bank out of the group. It has a good balance sheet, it has a good dividend, and it has a good business. And I mentioned this company in the top 5 dividend stocks because the dividend is actually really good. The company approved a 12% increase in 2017, and it also approved a buyback for shares, which is around 6% for 2017. And in my opinion, that is going to boost the EPS and reduce the dividend cost. And if you're looking to diversify your portfolio, this is one of the best companies to take a look at. Now let's take a look at the statistics, and as you can see, the beta is around 1.21, and the company reported earnings on July, and it actually had good earnings, and the next earning date is going to be on October 12. And as you can see in the screen, the forward PE is 11.99, and in the income statement, the quarterly revenue growth is around 5%, and the quarterly earning growth is around 13%. Now you have to keep in mind that the financials don't grow as fast as the technology stocks. And in the balance sheet, the company has 1.07 trillion in cash, and the debt is around 584 billion. So it actually has a good amount of cash to pay the debt, and in addition to increase the dividends in the future. And in the short ratio is 0.73%. And one number to take a look is that 76% is owned by institutions. And now we're gonna take a look at the performance in 2017. And JP Morgan has gone up 5.78% in 2017. And as you have seen, this company doesn't go as much. However, it's gonna bring a lot of stability into your account. Well, that is gonna be everything for the video. Please leave in the comment section below which of the following companies did you like the most, or if you have a better stock, please put it in the comment sections. And remember, this is just an informational video. You still have to do a research before investing into a company. And you can subscribe to the Financial Information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. I'm going to thank you for watching the video. Have an excellent day and take care, my friends.